Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The expected glow following the Chinese stimulus signals is surprising in its absence. Markets have turned quite sceptical, and the Chinese bond markets have sunk sharply. But first up today, we can report that the overnight GDP dairy pulse auction brought slightly lower prices for skim milk powder and whole milk powder, but that the fall in New Zealand dollars maintained the results in New Zealand dollars. Skim milk powder fell 1.5% from the prior week's full auction, and whole milk powder fell 1.6% on the same US dollar basis. But in the same week, the New Zealand dollar fell 1.3%, so call it quits in New Zealand dollars. Although they've noticed this overnight event, analysts are unlikely to alter their farm gate payout forecast based on this recent activity, although the ones who have forecast lower than the Fonterra midpoint will be feeling a little safer. Also overnight, the Red Book Index of US retail activity there rose only 4.2% from the same week a year ago, a much lesser rise than the 7.2% gain the previous week. In fact, it was the least gain since March, a bit of a levelling off, it seems. But jumping a lot is the latest survey of small business sentiment. The NFIB Small Business Optimism Index jumped in November to its highest reading since June 2021, and well above what was expected. It's also the first time in 34 months that the reading is above the 50-year average of 98. The election result is said to be the reason for this rise. And the latest USDA World Agricultural Supply and Demand Estimates report points out new restrictions of cattle imports to the US from Mexico because of an outbreak of screwworm, and the ban may be long-lasting. US imports of beef from other sources, including Oceania, are likely to rise. They also note that US milk production will likely turn up on higher milk prices. And there was another very well-supported US Treasury 3-year bond auction earlier today, and that resulted in a median yield of 4.07%, very similar to the 4.09% at the prior equivalent event a month ago. So no risk rise signalled here. In Japan, machine tool orders rose 3% in November from the same month a year ago, slowing from the 9.3% growth in October. Local orders were up 5%. The larger export order set was only up 2.2% as orders from China dragged. And China's export growth underwhelmed in November. It rose 12.2% in October, and an 8.5% rise was expected in November, some thought 10%, due to the front-loading of US demand ahead of 2025 tariffs. But in fact, the gain was only 6.7% from a year ago. Imports actually fell, a signal about their internal economic activity. Chinese imports from New Zealand are down 8.6% so far in 2024. Interestingly, China's stimulus announcements have barely registered in international markets yet. Markets do expect them to cut rates and raise spending, but the feeling seems to be that this will just help them stay little changed. So far, it has been a very underwhelming event. In Australia, the November NAB Business Confidence Index fell to -3 points from a 2-year peak of +5 points in the prior month, falling below its long-term average. We haven't seen such a big one-month negative shift since the pandemic. And relief from their central bank doesn't seem to be about to happen. As expected, the Reserve Bank of Australia kept its cash rate target at 4.35%. They said, quote, "Taking account of recent data, the board's assessment is that monetary policy remains restrictive and is working as anticipated. Some of the upside risks to inflation appear to have eased, while the level of aggregate demand still appears to be above the economy's supply capacity, and that gap continues to close," unquote. Analysts say this signals they remain confident they will get inflation back under control with the current policy settings and rates, taking a while, however. And we should perhaps note that coffee prices have surged to their highest level since 1972, driven by low production affected by drought in some parts, excessive rainfall in others. It is similar with chocolate or cocoa prices, heading back to their unusual March peaks. The US Treasury 10-year yield now is just on 4.24% and up 5 basis points from this time yesterday. And the China 10-year bond rate is now at 1.88% and down a very sharp 8 basis points to a new record low. And the price of gold will start today at $2,693 an ounce and up $24 from this time yesterday. And oil prices are up 50 US cents at just over $69 a barrel in the US, while the international Brent price is actually unchanged at just on $72.50 a barrel. And the Kiwi dollar starts today at just under 58 US cents and down 80 basis points from this time yesterday. Against the Aussie, we're unchanged at 91 Australian cents. Against the euro, we're down 40 basis points to 55.2 euro cents. That all means our trade-weighted index starts today at just under 67.9 and down 50 basis points from yesterday. And the Bitcoin price starts today at $94,850 and down 3.3% from yesterday. Volatility of the past 24 hours has been modest at just on plus or minus 1.9%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.